And it is April 20th, 420. This is a longtime holiday for marijuana enthusiasts and activists. And Eric, it's a good time to check in with the marijuana ETFs because this has become a big industry, right? $1 billion in marijuana ETFs. So lay out the landscape for us because there are really two that dominate.
Right. There's 6 all told, 5 in Canada, 1 in the U.S., but 2 are big. And when I get asked a lot of people want to invest here. Which one do I pick, right? There's 2 main ones. HMMJ is the one in Canada. That's the Horizons product. And then you have ETFMG, Alternative Harvest, which is here in the U.S. That's ticker MJ. The big thing to know about them is think about the countries they're domiciled in. Right. The Canada one leans a little more towards Canada stocks, and the U.S. one leans a little more towards U.S. That's one difference. The other difference is the Canada one has a little more small cap, a little more jumpy, but ultimately they're pretty close. They have about a 50% overlap. But what I find interesting about these is 2 things. One, our BI senior analyst Ken Shea, who covers this industry, looked through the holdings, and he says about 80% pure play on cannabis sales. That's good. A lot of these new theme products will bulk up with lesser pure play companies in order to get more liquidity. These look pretty pure. And it's interesting, if you compare the holdings of these 2 ETFs versus, say, a healthcare ETF or a Canada ETF, 0 overlap.
Right.
100% original exposure or active share, as we say. That is a good deal if you believe in the story.
Right.
If you don't, forget about it. But if you do, these things really capture them.
Well, and it's interesting, too, that the 2 top holdings of each of these are telling also. The Canadian one, Aurora Cannabis, which is a cannabis seller, is my understanding. The top one in MJ, the U.S. one, is GW Pharmaceuticals, which is UK-based, and that's a company that is developing drugs based on cannabis. So a little bit of a different leaning. I mean, granted, that's just the top holdings. That's not the entire picture. But it is interesting if those 2 top holdings are somewhat symbolic of what the 2 ETFs do as well.
No, I think they are. I think you're exactly right on that.
There's also a vice ETF. So that presumably includes other so-called vices.
Yeah, that's right. So the other way to get a pot exposure in the U.S. is ACT. Which is the ticker, which is perfect ticker, alcohol, cannabis, tobacco, right? You can see the exposure there. About half of it's alcohol. You got, and then the rest is tobacco and cannabis. Here's the thing, though. This is sort of partially what people call sin stocks. Right. And people have been talking about this sin stock anomaly, almost like a factor. Because they're so shunned by regular portfolio managers because of they're controversial, they tend to be very undervalued, or you get a good deal for the value. And they've doubled, the Syndex has doubled the S&P over the last 10 years, up 300% versus 134 for the S&P. So it's an interesting space. I think if that's something that people are interested in investing in, it's something to note that there is some kind of an anomaly here. But this one isn't going to get you that much. And this one, the ACT, is going to have more exposure to bigger stocks that are already in bigger indexes, not as much of a pure play as the pot ETFs.
All right, we've got to leave it there, Eric. Thank you so much. Eric talking to us about marijuana companies in ETFs. There's quite a few of them now.